Planning for estate tax and inheritance tax obligations is crucial for individuals who wish to minimize tax liabilities and ensure the smooth transfer of wealth to beneficiaries upon their death. Estate tax and inheritance tax are levied on the transfer of assets from a deceased individual to their heirs or beneficiaries. Here's how to plan for these tax obligations effectively. Understand estate tax and inheritance tax. Estate tax is a tax imposed on the transfer of an individual's estate upon their death. It is based on the total value of the estate, including cash, real estate, investments, retirement accounts, and other assets, exceeding a certain threshold, exemption amount. Inheritance tax is a tax imposed on the beneficiaries who receive assets from a deceased individual's estate. It is based on the value of the inherited assets and may vary depending on the relationship between the deceased and the beneficiary, as well as the state or country's tax laws. Know the exemption thresholds and rates. Familiarize yourself with the estate tax exemption threshold and rates applicable in your jurisdiction. Exemption amounts may vary by country or state and are subject to change over time due to legislative reforms or tax law revisions. Understand the inheritance tax rates and exemptions that apply to different categories of beneficiaries, such as spouses, children, grandchildren, other relatives, or unrelated individuals. Review and update estate planning documents. Review and update your estate planning documents, including wills, trusts, and beneficiary designations, to ensure they reflect your current wishes, preferences, and tax planning objectives. Work with estate planning professionals, such as estate planning attorneys or financial advisors, to create or revise estate planning documents tailored to your specific needs and circumstances. Utilize estate planning strategies. Implement estate planning strategies to minimize estate tax liabilities, such as gifting assets during your lifetime, establishing trusts, creating charitable trusts or foundations, and making use of estate tax exemptions, deductions, and credits available under tax laws. Consider leveraging lifetime gift exemptions, annual gift exclusions, and strategies such as generation skipping trusts or grantor retained annuity trusts, GRATs, to transfer wealth tax efficiently to future generations. Consider life insurance and annuities. Evaluate the role of life insurance policies and annuities in estate planning to provide liquidity, cover estate tax liabilities, and ensure sufficient funds are available to pay taxes and expenses upon your death. Designate beneficiaries and ownership structures for life insurance policies and annuities carefully to avoid unintended tax consequences or complications in the estate settlement process. Monitor estate tax law changes. Stay informed about changes in estate tax laws, exemptions, thresholds, and planning opportunities that may impact your estate planning strategies and tax liabilities. Consult with tax advisors or legal professionals to assess the implications of legislative reforms or tax law revisions on your estate plan and make necessary adjustments to ensure continued tax efficiency and compliance. Communicate with family members. Communicate openly with family members about your estate planning intentions, tax obligations, and wishes regarding the distribution of assets to facilitate transparency, avoid misunderstandings, and minimize potential disputes or conflicts among beneficiaries. Discuss tax planning strategies, the role of trusts, charitable giving, and other considerations with family members to ensure alignment with your overall estate planning goals and objectives. Seek professional advice. Seek guidance from estate planning attorneys, tax advisors, or financial planners with expertise in estate tax and inheritance tax planning to develop comprehensive and tax-efficient estate planning strategies. Work with professionals who can provide personalized advice, analyze your estate planning needs, and implement strategies to optimize tax outcomes while achieving your long-term financial and estate planning goals. By following these steps and implementing proactive estate planning strategies, individuals can effectively plan for estate tax and inheritance tax obligations, minimize tax liabilities, and ensure the orderly transfer of wealth to beneficiaries according to their wishes. It's essential to stay informed about tax laws, review and update estate planning documents regularly, and seek professional advice to navigate complex tax issues and achieve optimal tax outcomes in estate planning.